own an expensive piece of art like a Picasso but can't quite afford it, a thing called fractional ownership may be for you. I'm Rosemary Miller here with Maria Gracia Santillana Linares, a reporter here at Forbes, to tell us more. Thank you so much for joining me, Maria.
Thank you so much for having me.
Absolutely. So, Maria, what is fractional ownership?
So fractional ownership is actually much more common than we think it is. Think of timeshares, private jets, some yachts, even racehorses now. It's the idea that a lot of people come together and are owners of another thing that is kind of like a stock. It's treated for investment purposes, but it's not usually seen as like a company or as a vehicle for investment. So in the case of art, what we're really seeing is this kind of new trend of companies buying entire artworks and then selling shares of them to investors. There's no really other perks other than, once the artwork is sold, you get the return. But as you mentioned, is really helpful for investors who, want to diversify their assets, want to look at, more creative or cultural ways of investing and would like to own a Picasso or a Monet or a Warhol, and then just simply don't have the funds to buy it up front. And so what it allows you to do is, for a certain amount of money, whether it be hundreds or thousands of dollars, it gives you a piece of access to the returns of whatever that $1 million painting would have once it's resold again.
Yeah, because I cannot afford a $1 million.
Yeah, exactly.
But Maria, so you said there are no other perks. So could you tell me, so what are the cons?
Yeah, exactly. So it really depends, varying company to company. There's a couple of companies that do this now, both, off-chain. I cover cryptocurrency here at Forbes and blockchain. And so when you look at, the market leaders off-chain, so who are purely selling, securitized shares by the SEC, the real investment and the real kind of draw to do that is to just get a share of profits when you're sold. So let's say, painting X is sold, has 10 shares available. Each share is available for $1,000. And so, you buy that, you get your $1,000 share of it. Once that piece is resold again and say that it sells for $2,000 this time, you now get the equivalent of the one share. And so if you bought it for $1,000 and it was an entire piece, now, you will get your $1,000 equivalent of the new share. And so whether that is 10% of the painting, then you'll get 10% of the reward once they're sold again.
Well, this kind of sounds like NFTs in a way. Is it an NFT?
Yeah, so that's where it gets a little bit more complicated. So that's the off-chain version. The on-chain version, you've seen a couple of companies do this thing with blockchain and bring blockchain onto the mix. And so what they do is they tokenize the share, not the actual image. There's a lot of copyright questions involved. Just because you own a painting doesn't mean that you own the copyright to it, which means, you can reproduce it, you can sell it, you can put it on t-shirts and, make a little profit off of that. And so the way that companies have kind of said, we're not going to get into those questions of copyright. We're simply going to tokenize the shares. So that means that, I buy 10 shares on a Warhol and I decide that, that investment is no longer for me. I need the cash and, I need to have access to the capital that I put in because I don't want to wait for whenever that painting is sold again. I can now sell those shares on a secondary market. And so, off-chain traditional companies will do that in their own proprietary systems. But companies like Freeport, which is kind of the company that we spoke about in the article, are doing it on-chain. And so what they do is they mint Ethereum tokens where you can go in on their platform share. So let's say you were an investor who, was interested of owning shares, but by the time that you decided that you wanted to buy those 10 shares of a Warhol, they had run out, there was no other availables, and you're just kind of sitting and waiting. I can go and then sell them on the secondary market, and you can buy them on the secondary market. So I kind of give up my rights and give up my shares to this work, and you buy them. That's all done on chain. And so, the provenance that blockchain provides is really the draw there, is that there's a record of me giving those shares to you and you doing whatever you want with them and, for how much I sold those shares to. And so that's kind of the blockchain aspect. There's companies trying to do a little bit, the step forward and say, okay, well, what are the perks that can we give our shareholders? And so there's the ability to kind of display a digital version within a virtual gallery that they're hosting. Okay. And so, for example, Freeport, what they do is, once all the shares of the paintings are sold and they're completely owned by Freeport, and I, as a shareholder, can now go onto the Freeport website and display a digital version of the painting I own. So let's say I own 10 shares of the Marilyn, the pink Marilyn, it's a beautiful painting, had the opportunity to see it live. But I can't show it live in my person, right? I can't put it up in my apartment. I can't put it up in my office. I can't really see it live. The shares don't allow me to do that. That's not kind of a perk that comes with it. but I can, put it up on my digital metaverse gallery, if you will, and have it shown there.